Boom, guys, what is the crack? I have two amazing guests here today. Guys that are early on their journey into Bitcoin and crypto, Luke Flanagan and Dave Shelvin. Welcome, guys.
Thanks very much,
I
D.
don't know how you,
So, I thought, just as a different angle on the podcast, it might be good to get a couple of boys on who are early on their understanding. And maybe we'll work through some questions, and you can hit me with some questions, and I'll push back and see where your understanding is. And I thought just might be a slightly different approach to the podcast. So with that, I'm opening the floor up. Where do we start, lads?
I
I
one for
suppose,
you.
I suppose before we actually get into your questions, maybe I'll just find out where you guys are. So, Luke, what's your understanding of Bitcoin?
I wouldn't understand, how it's all built, and I know it's something to do with blockchain, and I think that's all very complicated. As far as I'm concerned, you put your money in when it's low, and you watch it grow. That's all I really know. We're not too much deeper than that. So I want somewhere to put my money because, as I know, when it's in the bank now, because of inflation, the value of it's going down. So I need something to do with it. And Bitcoin just seems like for me, the easiest, most viable option.
Okay,
And that's where I'm really at.
really simple, and just an investment vehicle. That's awesome.
That's it. Yeah.
Dave, what about yourself?
my understanding just is that it's like almost like a virtual currency as such, and it is some way you can invest your money in and then cash out or keep your money in it and hope that it grows. Yeah.
Okay, cool. So thinking of it more like a currency, but also like an investment vehicle to some degree. Yeah, I suppose we all start there. So let's open up the floor. I think, Luke, you said you were going to hit me first. Where do you want to start this?
Yeah, well, obviously now what's going on, and I have some of my friends who are into only starting, in crypto and Bitcoin. They're like, "What's the story lately?" Like my old lad was saying to me, "You need to get your money out of there. It's going to go down to nothing." Because it's all over the news that it's gone now. It won't be coming back. Kind of came back a bit there in the last week or two, but I don't really know what the story will be. Why it's I know it's super volatile, but why it's doing what it's doing really. I'm sure there's like multiple factors, but I don't really know.
Sure. So I think it was in 2020. You can have a look at my website. I done a blog and I was preparing people for when Bitcoin crashes. We were ripping and it was absolute bull market. No one's probably interested in reading it, especially all the new participants. But people who have been in this market for a little while know that Bitcoin is guaranteed to crash. That's what it does. It rallies when it crashes. Now, over a 13-year timeline, when we look at a logarithmic chart, it's just gone straight up. But when we zoom in and we look at the monthly or we look at the daily, it's like this. It goes up and it crashes and it goes up and it crashes. So in short time frames, there's some sick volatility that you have to endure. And I always say to people, like, the irony is people think people who bought Bitcoin early got lucky. They did not get lucky. They've went through multiple times where they've seen their net worth of their Bitcoin assets like go down 60%, 70%, 80%. So it's not luck, but it's part of the journey. And Bitcoin will crash and consolidate. And over a 4-year market, um, Bitcoin sets higher highs because it gets twice as scarce every 4 years. It's just built into the protocol. That's why it's a money that's designed to go up in value over time, because unlike our euros, which are designed to go down in value over time, the reason they're designed to go down in value over time is that they become more abundant over time. Bitcoin is the opposite. The reason it's designed to go up in value over time is because it gets scarcer over time. But all markets, all financial markets, are ruled by emotions, human emotions of fear and greed that I suffer from and everybody suffers from. So we get overly bullish, meaning we get greedy when things are rallying. And then, of course, we're at the stage the opposite now, where everyone thinks Bitcoin is dead, and we're overly bearish, meaning people think Bitcoin is over. But for newer people, I point them to a good resource, and it's called Bitcoin RIP. And it was every time that Bitcoin's been declared dead in the media, and I think there's over 400 instances of that now over 13 years. But Bitcoin hasn't died. If we look at fundamentals, so I'm an investor, so I'm looking out a decade. I'm looking out at least 5 years with any investment that I'm going to put my money in. And if I look at the fundamentals of Bitcoin, the network has never been stronger. The hash rate, okay, which is the power of the network, set all-time highs just recently. The adoption of it is continuing to grow. The amount of people owning zero point 0.1 of a Bitcoin is at an all-time high. The amount of people owning one Bitcoin is at an all-time high. The amount of people owning 10 Bitcoins, I think that's also at an all-time high. So while the daily price of this thing is all over the place, I'm not interested in the daily price. I'm not interested in the fundamentals, and the fundamentals of this thing. It's growing in its decentralization. Tesla sold, that was one entity who sold. And when we look on chain, we can see that Tesla's Bitcoin was bought up by hundreds of thousands of little people. Okay. And that's where the strength of this network is. It's in numbers and people, not single entities centralizing the network and owning huge amount of coins. It's in more little minnow people, okay, little shrimps owning fractions of Bitcoin or owning a Bitcoin. So for me, the fundamentals are what's important. And the volatility is part of the journey that anyone who wants to invest into this thing, you've got to be aware that you're going to go through this sort of volatility. And that's why your time preference, you should be looking out at least 4 years and factoring in Bitcoin's halving cycles. And ideally, like I put Bitcoin as an investment vehicle or somewhere I want to protect my wealth for decades, or money that I really don't need. So it's not money that I need for living expenses. It's not a get rich quick. It can be a get rich quick if you get lucky and you time the market. But for me, it's not about market timing, because 90% of people don't time the market correctly. And for me, it's just a dollar cost average. It's a long time preference, and you use basic investing rules like don't invest more than you're prepared to lose. Separate your investing capital from your living expenses, so that if your investment goes down, it doesn't affect you because you have all your living expenses. It's investment capital. It can go down. It can stay down for 2 years. Okay, and that's sometimes where people go wrong, is they don't use sound investing fundamentals. How's that for you?
Yeah, there's a lot there to digest.
Yeah.
Like I kind of just use Bitcoin as, I was saving in the credit union, and I'm like, sure, like what am I really getting in return for that? And you compare that to, putting into Bitcoin, it just makes more sense, really, for like a monkey like myself who doesn't know what to do with the money.
Yeah, like to break that down a little bit, because I'm very bullish on Bitcoin, but I don't like to mislead people. Savings in physical cash, are traditionally a safer place for your money. Okay, you're going to suffer from inflation and your money is going to trend to zero over a long enough period of time. Bitcoin is the highest performing asset that's on the planet, but it only has a 13-year history. Now, I think I understand Bitcoin pretty well, and I think I don't want to say it's inevitable, but it's got a very high chance of continuing its success. So while I still personally, I hold euros in the bank, and I know that they're going to suffer from inflation, but I know that they're my security money, they're my emergency money, it's my liquid cash that'll always be there, and my Bitcoin is my long-term investment sort of money. So yeah, I'm not.
I'm sorry, Dinny, would you have like made most of your wealth, say, through Bitcoin or through other, I don't know, I know you said something about you having a gym or something. What would you say for you is what's bringing in the cash? Is it a smart Bitcoin savings plan or your job or what,
Yeah, no, I haven't made any money through Bitcoin because I've never sold any Bitcoin. I don't see the point of selling it, because I'd be like selling it for something inferior. Like I'd be swapping an asset that goes up in value over time for euros, and euros go down in value over time. So I don't need, it's investment capital. So I'm happy to park it and leave it, forget about it, and not create taxable events by trying to sell it. So no, for me, I generated my wealth. Very personal question, by the way, but through building businesses, fitness businesses, and various other entrepreneurial ventures. But yeah, no, I'm not someone who bought Bitcoin early, sold Bitcoin, became rich without understanding. I'm someone who lived in a mobile home, done a hard slug, created business. Some of them worked, some of them failed. Gave up a 9-to-5 job. Well, I didn't give it up. I broke my back, so I couldn't do it anymore. To an entrepreneur, where you have a 24-hour job, 365 days a year. And the argument is entrepreneurs do it for more freedom.
Yeah. So here, what's the plan then with Bitcoin? Do you cash out like in your 90, or do you just keep holding it, or what's the story?
The plan for Bitcoin is, because it's an investment asset, I only am going to sell it when I want to realize the gains. When I want to actually never work again. I'm fortunate. I enjoy work. It's a bit of crack. I consult a lot. And so I don't, because I have a wage coming in, I've no reason to draw upon my investment assets. So for me, it's just leave them, let them work. When the time is right, maybe it's in a decade, maybe in 5 years, I might sell some Bitcoin. I don't know. Just at the moment, I'm like, that's my investment. I don't need
Yeah.
it. It's safe parked there. So I'm just going to leave it, do its thing, and my business revenue is what pays for my living expenses, and
Yeah.
and whatever's left over, that becomes investable capital.
I get you. Yeah.
See
Hey,
that too, you were saying about
yeah, Dave.
just
Okay.
generally Bitcoin, like where would you advise, say, buying it, or how would you go about buying it? Because when you put something in online, you get
Yeah.
so
Good
many
question.
things as to where to buy it, and you don't know where it's actually legit, like as in, that it can be trusted and everything that you'd actually buy. And then how much can you start off with? Like, as you mentioned there, say 0.1 Bitcoin, like is there any, you can probably buy any decimal of it or whatever, or is there a minimum purchase or what?
Yeah, David. So you don't own any Bitcoin, isn't that right?
No.
Awesome. Where would you get started? You'd get started on one of the bigger exchanges, like a Coinbase or a Crypto.com or any of these. I'm not affiliated to any of them.
Yeah.
So you can get started on
eToro, one of them, is it?
Say that again.
eToro, is that one of them? I think, is it
Yeah,
eFlow
there's
or
the likes
something?
of eToro and Revolut. The problem I have with them is that you can't withdraw your Bitcoin off the exchange. And the invention of Bitcoin was money that you can own.
Yeah.
So you're almost bypassing the revolutionary thing that Bitcoin created, was a money that you can
Mm.
own and give yourself really strong property rights. So for me, Revolut or eToro, they wouldn't be my favorite place. But if I'm dealing with someone who's really, really struggles with technology, you're getting price exposure. It might be an okay place to start. But in Bitcoin, we have a phrase and it's called not your keys, not your coins. Now, we've seen over the last couple of months in the crypto markets, I'm not sure if you guys are aware of it, but a lot of the really large, the largest lending platforms have ran into liquidity troubles, meaning some of them are bankrupt. Um, and anyone who would have held their coins with those third parties now doesn't have their Bitcoin. Okay. And they have to go through, bankruptcy and whatever comes back, and maybe they'll take
Yeah.
profit on their coins. So the essential skill to learn with Bitcoin, and in the Retire Early Club, that's why our first month we just hammer this home to people, is to teach them how to use hardware wallet and teach them how to custody their coins. So you can buy your coins anywhere. To me, it doesn't really matter where you buy your Bitcoin, whether it's on Coinbase or Binance or Crypto.com or whoever you're using. What's important is that you withdraw them off the exchange and you keep them on your own hardware wallet, because that's the invention of Bitcoin. It's money you can own, but unless you take it off a centralized exchange, you're suffering from counterparty risk. And the reason why that's a problem to me, okay, this whole industry is so new. I'm an entrepreneur and I understand entrepreneurship and I understand the startup companies. Okay, in your first 5 years, you're 90% chance you're not going to make it to 5 years without going belly up. That's just the statistics of startup companies. And your second 5 years, that doesn't change. Now, this industry, most of these companies are only within their first 5 years. Okay, so they're high risk plays. If I'm going to buy my Bitcoin and just leave it on them aimlessly, I'm playing against 90% odds that Bitcoin, there could be a problem with it, like we've seen in some other crypto native companies. So for me, it's important to learn how to use a hardware wallet. And then the second part of your question is, how much can you buy? The beauty of Bitcoin is, and what really attracted it to me, I mentioned I used to live in a mobile home. And I remember, Luke, you were mentioning that you started reading Robert Kiyosaki, Rich Dad. And I read that book um, a long time ago, and I was like, right, I've got to become an investor. If I'm stuck in this mobile home, the only way out of it is to pay myself first and get some investments going. And I rang up a financial advisor and it says I've 30 quid to invest at the end of the month. And they pretty much laughed me off the phone, because they don't have a vehicle for someone who's coming at them at 30 quid. You want 300 quid or 3 grand a month, really. But the beauty of Bitcoin is you can invest in 30 euros worth of Bitcoin every month, and that's no problem. You can invest in €3 a month. So it opens up the game for everyone, and that's why I think it's really, really awesome, because it breaks down the barriers, and everyone is welcome. So unlike property, you leave a lot of money behind you, or it's with the stock market. A financial advisor will only really want to talk to you if you have a couple of hundred quid to invest into their products. We do have the likes of eToros and that, who have sort of democratized stock investing, and you can do that for zero fees on some of them. But Bitcoin really has democratized property investing, because you're able to buy property now. You're a property investor in digital property, and you don't need to have 300 grand behind you. You can do it with €3 behind you and build your portfolio that way, if you think you have much to invest. So yeah, no minimum, David.
Yeah, cool. That's brilliant. Yeah, I just even heard you mention say the would you say hardware wallet, is it, or?
A hardware wallet. This is how you can custody your crypto or your Bitcoin. Okay, they just look like a little USB, and all you're
Yeah.
doing is you're transferring your private keys from an exchange or mining them onto this little wallet. Okay, now, um, even when you put your Bitcoin on this, you can back it up. So if this gets lost or stolen or water damaged, it doesn't matter. You still don't lose your Bitcoin. So there's a little bit to learn about how to custody Bitcoin and how to use a hardware wallet and how to back it up and how to connect it to an exchange. There is a barrier to entry at the moment in that it takes education. It's a little bit clunky, but anyone can do it. I've had people in their 70s and 80s set up hardware wallets, custody their Bitcoin, and transfer it, and then learn how to store their ledger wallet correctly, and how to back it up and how to keep it secure. So while it is a little bit of a barrier to entry, and I think that's why we're in a bear market now. A bear market just means the market's down and everyone's saying Bitcoin is dead and it's over. This is a great time to build your education, to start learning about this stuff, and to get involved and buy a little bit of Bitcoin and just get used to custodying it. And the magic for me, because I've been through more than one of these market cycles, is the work that we do in the bear market when no one's interested and everyone is telling me it's dead. This is where the wealth is created in these period of months, whatever we get. I don't know how long it will be before the market switches. It could be another year, it could be 2 years, it might only be 2 months. Nobody knows. Nobody can predict what the market's going to do. But the idea in investing is to buy low, sell high, and we are certainly low because Bitcoin was 69 grand and it's now somewhere in the 20s, so it's very much low. But yeah, hardware wallets is how we store our crypto.
And here, Dinny, I have a quick one for you.
Do it.
So my kind of, like, I haven't really educated myself too much, but from my understanding, like, you make your profit when you buy. So my plan was to buy low. So whenever there's a crash, and then just hold it. That's it.
Yeah.
What you think of that?
Well, that's what I do.
Well, then I'll do that. So must work.
It really depends on your time. The problem with Bitcoin is people think it's a get rich quick scheme. Now, 5 years isn't that long away. Like, it's really not. Or 10 years. Like, time passes, time flies. And to buy and just own some Bitcoin, it's a very simple play. It's binary. Like, this technology is digital gold, and it changes our world, just like digital maps changed our world from physical maps, and they were orders of magnitude better. Michael Saylor hammers that point home enough. Okay, or digital music from CDs and DVDs, digital media. Okay, or filing cabinets to the cloud. This either is digital gold, or it breaks and it doesn't succeed for some reason that we don't know yet, because every attack vector that's been thrown at Bitcoin over 13 years, it's eaten it and came out stronger. So all the attack vectors that we know about haven't been able to kill it. All right. So if it succeeds and it is digital gold, which is just a baby step, it can be much more than that, but that's a baby step for it. Well, it's worth orders of magnitude more than 20 grand per Bitcoin. It might be 6 million per Bitcoin if it achieves full digital gold status and it demonetizes gold. So in that sense, then it's very simple. I buy the asset, I hold the asset. Like all investments, I'm either right or I'm wrong. I think I'm going to be right. That's why I'm very bullish on Bitcoin. But I also invest in other asset classes in case I'm wrong. And that's why I'm not 100% allocated to Bitcoin. And, some people have different risk tolerances, and they may be overexposed to Bitcoin or very exposed to Bitcoin. That's fine. If they're right, they'll be really right and really wealthy. So everyone has to manage their risk accordingly. But buy and hold strategy, that's how everyone who's very wealthy got very wealthy. They just bought something and they held it, or they built something. They built a business and they held it. And that's the secret. They didn't trade their way there. They didn't earn their way there. They just bought something and held it and wait till the market figured out what they had figured out a decade before.
Yeah.
See there too, you mentioned that you're not invested solely in Bitcoin. You have other investments. Is there any other kind of like crypto that you're invested in, or is there anything else that you're invested in that you would be, I suppose, would advise?
I wouldn't advise on anything really, because I can't. Because you can't give people financial advice. Otherwise, if it goes wrong, they can come back at you and sue you.
I wouldn't do that, Dinny.
I'll not be saying it.
But here's why, but maybe someone listen to us, but it's just there's a reason why people give disclosures. And it's
But
just
an opinion, then I suppose opinion is a better word, isn't it?
from that, I'll always disclose that I'm not a financial advisor and
Yeah.
it isn't investment advice. For me, I'm very bullish on Bitcoin. Of all the assets that I have access to, Bitcoin is the one where I'm most exposed to. Do I own other assets? I own a little bit of Ethereum just because of the network effect. Like Ethereum is likely going to be worth a lot more. Again, it may not be. I could be wrong. Bitcoin could eat it and destroy it, but I'm hedged either way because I own both and I own a lot more Bitcoin than Ethereum. But for me, Ethereum's the second largest cryptocurrency. And, I don't think crypto's going away. I think there's going to be another massive bull run packed with retail, and all the exchanges are going to pump the market, and retailers are going to come in and make all the same mistakes that they do on their people who are listening to this who are on their first cycle or underwater and overexposed to altcoins made. So as an investment vehicle, as a wealth generating vehicle, Ethereum is likely to do really, really well. In terms of other things, like the further you go down the crypto list, things get much more risky, and it depends how you want to play it. A Bitcoin maximalist would be like, you shouldn't touch anything, everything else is a scam. And you can argue that point all day long, but my job isn't to keep a Bitcoin maximalist happy. It's to generate wealth for my family, because we all operate out of self-interest. And my first interest is my wealth and my family's wealth. So if I want to take high risk plays, venture capitalist plays on altcoins, I will. And if I get burnt on them, the maxis will laugh at me and go, haha, we told you so. But I understand that risk and I take on that risk, and that's sort of my choice. So for me, I don't really want to name names of other things, but just holding a basket of other crypto stuff, whether it's crap or not, retail is probably going to pump it. And if you can set some price points where you want to exit your positions. So unlike Bitcoin, where I don't sell it, I have a price point on Bitcoin at $250,000. Well, when I will sell some Bitcoin, but we're far from that. But on some other things, like, I will put a price on it, and when they hit it, I'll sell half of them, or I'll sell 33% of my position. And I've done that with altcoins and used that, and that's sort of a swing trade. It's not a short-term thing. I might be holding them for 2 years or 3 years, buying them now in the bear market. And when we get the next rip, when they're doing 10Xs, I'm selling them. But that's high risk stuff. And you're getting into, I think where people might go wrong when they come to crypto is they are overexposed to altcoins and underexposed to Bitcoin. Bitcoin's the easiest thing. You just stack it and hold it. And I think everyone's underappreciating what Bitcoin's going to do in a decade. Altcoins will rip in a month or 2 months, but unless you understand and you've got your exit points, you get absolutely wrecked when the bear market comes, as did so many retail people in the last 2 years. They came in, they were buying Cardano at $2 and $3 or whatever and thinking it was great. And now they're underwater so much. And not just to specifically name one, but any of them, a lot of altcoins are down a lot. So for me, other assets, I would own a little bit of gold just for the crack, and that's your Bitcoin. Property is sort of a thing for me because I have a property and I rent it out and all the other stuff. And for me, no, crypto is my biggest one, and Bitcoin is my biggest. I call it my pension, my retirement plan B, sort of pension plan or alternative pension. But that'd be what I'm most exposed to. But again, I think understanding your investing fundamentals, being able to separate your investing money from your spending money, because when your investments go down 80%, doesn't really affect your quality of life because you weren't living on that money. It's just like, all right, yeah, we've seen this happen before. I still have the same amount of Bitcoin. In Bitcoin terms, I still have the same amount. I haven't lost any. Just the market has decided Bitcoin's not worth as much. But in my head, I think Bitcoin's worth adding zeros to what it's worth today in a decade. So that's why I hold it. Yeah. What else we got?
I suppose I had a brief question there. It was just a simple enough one in relation to taxes, when you buy it. So one of the lads I was chatting to in the pub says, every time you buy, say through Revolut, which I do it through because, it's handy, you get taxed on it. But there's some other platforms you can use to get taxed a bit less. So, so what are they?
So when you buy Bitcoin, you don't get taxed. It's the beauty of
Do you
it.
not?
No,
Do you not?
it's not a taxable event to buy Bitcoin. And that's why I can buy Bitcoin today and I can hold it for a decade and I don't
Oh,
incur
does
any tax.
sorry. Not maybe tax, but I think you get charged like €1 or something for the conversion or something. Is that it?
Yeah, like all exchanges will have fees. Let me just finish off the tax thing because we did open that can of worms. So I'll just finish off
All
that.
right.
So Bitcoin is a property that you can buy and you can hold it tax deferred. If instead I go and I buy a physical property, I buy a house, I get a property tax on that every year, which is impacting the compounded growth of that asset. Okay. And in parts of the world, the actual property tax, if you hold a property over a long period of time, will mean the property will trend to zero. You lose the whole property because of the property tax. So with Bitcoin, I don't get any I don't get taxed every year. Now I do get taxed when I sell the Bitcoin. If I sell the Bitcoin in a decade, I'll pay capital gains tax like most assets. But it can accumulate tax free, which is really, really advantageous. And it sort of it encourages people to hodl or hold the Bitcoin. Don't incur a taxable event because in Ireland, if you try and trade Bitcoin, well, you're taxed 33% on it. So that means Bitcoin
Yeah.
has to correct more than 33% for you to be able to get back in. So it's just
Yeah.
because who the hell is a good enough trader that they're able to find 33% moves on Bitcoin and get in at the right time?
And
Nobody.
here,
There's no one doing.
the tell is the same because I'm studying property at the moment. You know, you don't really want to be flipping properties because obviously capital gains every time is 33%. You're better off getting the cash flow, you know, holding and getting cash flow. And that's what I want to do with property. So in the meanwhile, while I, you know, obviously don't have the money to do it or the, you know, I'm going to just keep investing in Bitcoin and have my money doing something. So that's, you know, that's pretty much where I'm at with it.
Yeah, and then just the fees on the exchanges, the olive exchanges. For me, I buy most of my Bitcoin through a broker. Pound for pound, it works out the same. The only difference is I have a fella on the end of the phone. I have a relationship with him. I can ring him up and say, "What's the crack? I want to buy Bitcoin." He'll put the orders through straight away. Once I send him a screenshot of a bank transfer, even though it'll take him 3 days, he'll buy the Bitcoin immediately for me. He'll help me transfer it back to a wallet. We'll do test transactions. People use broker or people use exchanges, and exchanges are great and grand, but they're a selfless experience. And if anything goes wrong, you're talking to an AI robot. So for me, I like having the human to human relationship. And if anyone is listening to this and wants a recommendation of a broker, just shoot me an email and I'll send you on my broker link.
Yeah, definitely send us on one. That'd be interesting.
Send it on, yeah.
Yeah, and it's just easier. Stephen, you had a question there. Or sorry, David. Stephen isn't with us.
Yeah, so see with Bitcoin and is it always going to be, you're saying that say euros is going down in value and Bitcoin's always going to increase in value, but I hear something too about it that it's constantly been made, but it's not always going to be constantly made. Like say for instance, there's always Bitcoin more and more being made, and then is it in years to come, or I don't know what the time of the date is, that they're going to stop making it? Is that right? Or
Yeah, that's a good question, man. So how Bitcoin is issued is sorry, Luke, I just muted you there because I think there's a bit of noise coming through. You can unmute yourself though as soon as you want to. How Bitcoin is made is it's mined. So similar to gold, Bitcoin is mined. Yeah, and we use that phrase just because we understand mining. But basically, it takes energy to create Bitcoin, just like it takes energy to create gold. And Bitcoin's issuance is in the first 10 years, the majority of the Bitcoin was mined. So we're out of the first 10 years. 90% of all the Bitcoin ever to be in existence are out in the world and mined and created. Now it's going to take 100 years for the last 10% of the Bitcoin to be mined. So that's kind of interesting because the majority are already in existence. And that's good because if I own something, I want to know how much of it is to come. And if there's like 50% or 80% of it yet to come to market, I know, well, Jesus, there better be a lot of buyers for this thing because there's a serious ton of it coming onto the marketplace. And if there's no buyers, well, the price is going down. But it's beautiful because 90% is mined and in existence and there's only 10% for the rest of the world to fight over. How it works is every approximately 4 years, the mining reward. So the miners who run the Bitcoin network, okay, they get rewarded. They get paid with Bitcoin to incentivize them to actually run the Bitcoin network. And the Bitcoin network is basically just a ledger. It's just a ledger of who owns what. And their incentive for managing this ledger and burning their electricity is that they can get paid in Bitcoin. So Bitcoin has a value. At the moment, there's 6 Bitcoins is your mining reward. So every 10 minutes, there's 6 Bitcoins created and they're given to a miner. It's sort of it's a lottery. And it's just random. So it bounces around, and miners don't mine solely, they join pools. So they're all sort of pooled in together and they share the rewards. So at the moment it's 6 Bitcoins, but in 2024, which is less than 2 years away, okay, we dropped to 3 Bitcoins mined every 10 minutes. So what that causes is the supply has now been cut in half, okay? And the way I like to explain this is, I like to pretend I'm an exchange. So imagine I'm a crypto exchange and I'm selling Bitcoin, and here's a Bitcoin that's on the shelf there, okay? And imagine there's 5 more of them, so it's 6 Bitcoins on the shelf, okay? And 6 lads come into my exchange and they take all the Bitcoin's gone. And then 10 minutes later, I get 6 of the product, 6 people come in, bam, 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 buy the Bitcoin, happy days. But in 2024, the mining reward is cut in half. And it's happened before. It used to be 12, then it was 25, then it was 50. Like, this has happened many times before. And that's where Bitcoin's bull runs have came in the past. But in 2024, I now only have 3 products on the shelf. Okay? And the way Bitcoin works is, it's not like any other asset where I'll be like ringing up the supplier going, lads, I need more than 3. You're going to have to get me 6. I was selling 6 of them every 10 minutes. Give me 6. It can't happen with Bitcoin. It can happen with everything else on the planet. We can create more of it, but with Bitcoin, we can't. It's just 10 every 10 minutes we get 3 Bitcoin now. It's now a problem because I've only 3 and there was 6 lads buying them. So now they think the asset has to get bidded up because there's 6 lads arguing over 3 Bitcoins. And one's like, well, Bitcoin's 20 grand. Oh, well, I'll give 25. And then another fella's, well, I'll give 30. And another lad's, well, I really want it. I'm going to give 60 for it. And then 3 lads end up taking the Bitcoin away at 60, whatever. But that's just how the price is found. Okay, so what we have is the supply is going down with Bitcoin. The demand for Bitcoin, if it remains constant, the price just goes up. Because if you have constant demand and declining supply, the price is going up. But we don't have that. We have rising demand and decreasing supply. Now remember, with everything else, when there's rising demand, we make more. In the early 2000s, we needed houses. We made loads of houses. We could do that. And then the housing market collapsed because there was too many. Okay. But with Bitcoin, the demand won't affect the supply. It's the only thing that can happen. And that's in 2024. In 2028, we're mining 1.5 Bitcoin. Now we're fighting over 1.5 Bitcoin. Like, at the moment, if you have a half decent job and a bit of savings, you can go out into the world and buy 1.5 Bitcoins. You know, you can. A normal pleb like me or you guys or any of us may have the ability to do that if we've been saving. But I don't believe that's going to be possible, you know, in 2028, because you're going to be buying all of the Bitcoin that's available in that 10-minute time frame. That today, that would be the equivalent of buying 6 Bitcoins off the shelf. And that's where it starts to get interesting. Put another 4 years on it. Now you're arguing over 0.75. That's the entire mining reward. And we're not bringing into account that in 8 years, okay, or 12 years, that much more people on the planet want this thing. We're just looking at today's prices and go, oh, well, it's the equivalent today of whatever Bitcoin is 20 grand. What's 20 multiplied by 6? 120 grand. So it's probably about 140 grand because Bitcoin's 23 or something, you know, and you're getting that for a lot less. And this just happens in enough time. We're arguing over 0.0001 Bitcoin. That's the entire mining reward for the world. And so it just trends to zero. Okay. And does that make sense, lads? Maybe push back with a few questions on it if you want me to elaborate or explain that a little bit better.
Yeah, no, that makes perfect sense. Yeah, no, that's brilliant. And then you mentioned, say, mining, isn't it? Is there just a thing that you can mine it yourself, or you can actually get I actually heard there was a fella talking about it. He was on about that he has like basically a bot that mines it every month or whatever, and he reckoned he was maybe, I don't know what, mining 0.01 or something every month or whatever. Is that such a thing, or what is that?
Yes, you can mine Bitcoin. However, from my experience of mining Bitcoin and buying Bitcoin, it's a much better strategy just to buy the Bitcoin. Because if you try to mine Bitcoin, you're going into a really competitive field. Okay, if you got free electricity, you're able to generate free power, well then possibly it could be worth looking into how to mine Bitcoin. But if you're just going to run Bitcoin mining and pay for commercial electricity, it's because electricity is up a couple 100% now. It's just not worth it. Plus, you've got a outlay of buy all the hardware. You know what I mean? And it might be 2 years before you're profitable. Then you've got downtime. Then you've got servicing costs. Who's going to run it? Who's going to maintain it? All that sort of stuff. You see, that's all on you if you choose to be a Bitcoin miner. And you're going into one of the most competitive industries on the planet. That okay? Or on the flip side of that, you can just buy Bitcoin and you don't have to do any of that. You don't have any of the outlay. You don't have any of the headaches. All you have to do is keep the Bitcoin safe. And everyone else on the planet makes your Bitcoin worth more. Whereas when you're running your mining operation, it's all on you. You have to do all the work. You have to put all the energy into it. You have to put all the capital into it. And you hope that it actually works out, that you're able to mine Bitcoin cheaper than you could just buy it. It might only be a couple of percent cheaper. Was it worth it? You could just have bought it and done nothing, and the rest of the world makes your Bitcoin more expensive. So for me, for anyone who's retail thinking about mining, I'm like, why would you bother? I don't think there's any point in mining. Leave that to professionals and just buy Bitcoin.
Oh, well, thank you.
Background to mine, I'd say as well.
Yeah, you probably need to understand computers and software and
this fella, he actually talked with someone. I don't know whether he mentioned it was in Russia or someone that was the machine was or whatever, or I don't know. I didn't get fully into it, but I did.
Yeah, and one thing to note as well, especially for any beginners who might be listening, there's a lot of scams. There's like, we can mine Bitcoin, we can do that. Let me show you a screenshot. There, you sent us a tenner. Now you have 100 grand in your account. Send me another 100 to get it out. And you know, anyone can, like, even I have the ability to spin up a website and send you screenshots of amazing charts and amazing mining results. So just be aware of that. Whenever you're sending money to people to get money back, you're probably never going to get it back, especially in crypto, because people don't understand it. And if something is like amazing returns and not even like 10% above whatever, you're probably never going to see your money again, regardless if they've shown you loads of money. Because I have heard of mining scams where someone is mining for them with a bot and whatever, but literally it's just a scam.
Yeah. And here, Dinny, just a quick one on dollar cost averaging. So I kind of had a brief look at that, and you know yourself, it's just you put it in a fixed time every week or a month or whatever it is. How would you rate that against what I just plan on doing, just putting it in when it's low, like accumulating the cash, and then whenever a bear market comes, just throw it all in? That's my plan.
I like the DCA strategy. That's what we do in Crypto With Dinny when we're building the plans in the consulting or in the Retire Early Club. We'll do that. Then we'll sort of do a hybrid. If people have capital on the side and they want to bring it in, well then we do a hybrid model. But DCA is just like, that's how we all allocate to our pensions. People don't look at the stock market. If people looked at the stock market and their pension the way they looked at Bitcoin, they wouldn't invest into their pension either, because everyone's pension right now is losing money and absolutely obliterated over the last couple of months. You think your Bitcoin's down. Have a look at your pension, because some people have been investing into their pension for 10, 20 years. It's seriously underwater now, I'd be pretty sure. So you see, we don't do that. We just, every month, our pension comes out of our wages. It just happens. We get a tax incentive to do it. So for me, that's how I invest into Bitcoin, because it's very volatile. I don't really care about the day to day, and I'll just set a day of the month, and I have a little alarm on my phone. It'll just go buy Bitcoin. It just says DCA, and it's just my little reminder to buy the Bitcoin. And I suppose it's slightly different if someone has no Bitcoin and they're trying to get in, or like, well, I have this much capital, I want to get in, how am I going to get it in? But normally I will do some sort of a dollar cost average strategy rather than doing single one-off trade. Even if I have a lump to get in, I'll dollar cost average in over a couple of months, and then I'll pull back to whatever's the dollar cost average amount. Then let's say if I have 5 grand, I might do $1,000 a month for 5 months, and then maybe in my thesis I decided, okay, I'm gonna invest in €100 a month into my Bitcoin pension plan. So then my DCA is just 100 quid a month going forward from that. But for me, I'm a big fan of dollar cost averaging. I think it protects you, because you don't really know when it's low. Like, Bitcoin is low now. It could go lower. It could go 50% lower. It could. But for me, it doesn't really matter. It's just dollar cost averaging. Markets go up over time. Bitcoin is no different. It's the difference with Bitcoin is, like, Bitcoin can recover in a couple of months what it might take the stock market a decade to recover. That's the beauty of Bitcoin. When this thing moves, it moves, and that's why it's my favorite investment. But yeah, DCA is sort of something that I use, and I think it's an essential skill that people should learn to use and do, because it protects you from your emotions of fear and greed that we all have. And in the good times we think it's going up and it's going higher, because Sure, everyone thought 100k Bitcoin was priced in. Some people were calling for 300k Bitcoin 2 years ago. And here we are now at 20k.
Yeah. I got caught out there for the when the Bitcoin started to drop there about 2 months ago. I started throwing all my money in, and by the time it just dropped by half, I had no money left. And it dropped another half, and I was like, "Oh no!"
Yeah. So there you go. Your strategy is inferior
Yeah.
to dollar cost averaging. So maybe you want to change your strategy.
I take
You
one thing
don't
away.
know when it's low. We don't, and that's why I like dollar cost averaging, because it just protects me from my own emotions, which I have and we all have, I suppose.
Yeah.
What else we got?
Go on, David.
That's it. I'm nearly all out.
That's it. Bitcoin.
Yeah. So yeah.
No, don't let him off the hook that easy, David. Yeah, I think like just Bitcoin is just the handiest thing for someone who doesn't really know doesn't know how to invest in property. It's handier than gold. You have to know a good bit about gold. Like I was chatting to one of the boys on Cashflow Ireland, they were saying about putting the money in the gold, and I was kind of thinking, I'm just going to stick with the Bitcoin now. It's just the handiest option, just buy low and hold dollar cost average, and probably get one of those keys in the future when I have a few more pound on it is what I'll do. But at the moment I've only about a couple of grand, so I'm just going to keep doing it through Revolut.
You know that 1,000 quid in Bitcoin 10 years ago was worth over 3.5 million today, even at this crash. So maybe if you only have 1,000 quid, it might be worth you getting a key.
Yeah.
Hold it for a decade. Don't wait till it's worth 3 million. Don't wait till your exchange goes, sorry, we've closed withdrawals, which has happened to a couple of million people over the last couple of months. So I would say learn how to self-custody. It's an essential skill. Don't wait till your crypto's worth much, because you don't know what this thing's going to be worth in a decade. And here's about young men. Touch wood, we've all got a couple of decades in us. So your 1,000 quid of Bitcoin or a couple of grand, it's got the potential. It's not guaranteed, but it's got the potential to be worth a hell of a lot more. What I'd say about gold is me being a gold investor, and before I was a Bitcoin investor, I was a gold bug. That's how I think understand Bitcoin very simply, because I've done years of work on gold. Gold, for me, won't make you rich. Gold will just keep you rich. If you've already made all your wealth and you want to put it in something that's got zero counterparty risk, we'll buy gold, okay? Bitcoin, on the other hand, has the ability to make you rich because it's a speculative store of value, okay? We're speculating that this is digital gold. So for me, gold is a record player, and Bitcoin is Spotify.
Yeah.
10 years ago or 5 years ago. Do you know what I mean? When Spotify was shit, maybe 10 years ago. It was only an idea. It was clunky. No one wanted to use it. No one understood it. Everyone loved the sound of a lovely record or a CD or whatever it was. So you don't have to pick one or the other. Maybe hedge yourself. But gold will keep you rich. Bitcoin will make you rich. Or let me reframe that. Gold will keep you wealthy. Bitcoin has the ability to make you wealthy. Potentially, possibly. Who knows?
Yeah.
Guys, thanks for coming on for the questions. Is there anything else there that we haven't covered or you'd like to dig into?
For me, that's everything, Dinny. Like you covered it. You covered everything. It seems to be simple enough. Obviously, there's a few bits putting on the key in that, but you buy low, you hold, you keep it for a while. You don't sell. That seems to be it, doesn't it?
Yeah, I like thinking of Bitcoin as property, just as a digital property, and just like if you own. Give an example. My mom was going back to the age of my granddad. He was able to build a home for his family and build 2 spares. Imagine that now. You can't even fucking get a home for yourself. But that was how life was different then. Money was worth more, and your time got you more money. Okay, so my mom had a property and she wanted to sell it, and I was like, well, if you sell the property, you're going to get euros, and they're going to sit in the bank, and you're going to have to figure out what to do with them. What are you going to do with those euros? If you leave them in the bank, they're going to trend to zero with currency expansion and inflation. Okay, so rather than selling the property, I always think it's a much better idea just to keep the property. Property is going to pay you rent forever. For as long as you're alive, you can have a tenant in that property paying you money.
Yeah,
why would you sell the property? So for me, holding a property is the smartest thing that we can do, and keep the property forever, because the property has only ever gone up. We're on a fiat standard. We're going to print more money forever. Therefore, anything fixed, okay, or scarce, like a property, like a house, a physical property, it's probably going to cost more euros in 5 years and 10 years and 20 years to buy it. And the rent is going to go up and up and up and up. So
Yeah.
Bitcoin is the same. It's just a property. For me, it's just something that you want to hold. You're just buying it and you're speculating that this is Henry Street.
It's definitely, I think it's probably definitely a better investment than Bitcoin, but Bitcoin is more accessible, from my understanding, anyway.
Yeah, I wouldn't say a better investment than Bitcoin, but we all have
from my current level, that's what it looks like.
yeah, cool. I couldn't let you away with that in case people are like, Dinny agrees the property is better than Bitcoin. Bitcoin's much better. The digital is always better than the physical. We just got to wait till the rest of the world understands it, which they will. It might take a decade, but they'll get there. But guys, I want to thank you for jumping on and giving me your time this evening and throwing a few questions out. It was great to have you on, Luke and David. Thanks, guys.
Oh, definitely, Dinny, and sound as yourself. Thanks for having us. And is this going up on YouTube or what?
Yeah, you're going to be YouTube sensations, and goes out on what's the other one called? Spotify. Yeah, boom. Yeah.
Oh, deadly. We get some royalties out of that we can put into Bitcoin now.
Yeah. Sats galore.
Yeah, no, thanks very much, Dinny. There was plenty in that. Then you answered everything that I wanted. Thanks very much. I'll definitely be back on you.
Sound, lads.
Yeah, and email, send us on that email of the broker as well. I must actually fire my email here now. So
fire me an email just to remind me, because by the time I turn this off, I'll have 4 more messages and that'll be gone out of my head.
Yeah, no.
Send me an email, I'll shoot it back to you. Anyone listening who wants a broker recommendation, shoot me an email. hello@cryptowithdinny.com. All right, lads, Dinny out.
Take care.
Cheers.